Good morning, everybody. Welcome, welcome. Oh, it looks like still got the same music playing from yesterday. All right, beautiful. We're all here today. Slowly, we're coming in. Let's just wait a bit, like let's just wait 4 or 5 more minutes, and then we're gonna continue on. I think we're gonna try to simulate pound AUD. Been slowly moving towards pound AUD, so I think it's going to be a pretty good opportunity to kind of like back test pound AUD here. Nice sunny day here today as well. 20 degrees, pretty smooth. Let's take a look at, while we wait for people to come in, let's take a look at what's going on this week. So Monday is, oh, this is this previous week. Oh, nice. Look at that. We got holidays on Monday. CAD holiday, Euro holiday. It's going to be low volume. Probably going to relax on Monday. We got Tuesday coming in. Tuesday, we got easy day. Looks like a bit of an easy news later on. Wednesday looks pretty simple. GDP on Thursday. Yeah, it should be pretty easy week next week. Nothing really. You're not audible. Sorry, you was on mute. Oh. 90% of the time, the problems is within us. 90% of the time, problems are with us, but we tend to think there's a problem with someone else. It's normal in life. Yeah, I think next week is going to be a pretty smooth week. No breaking news happening, nothing at all. Tis my birthday and just got my incentive magic keys yesterday. Oh, nice! Congratulations. Yeah, a lot of people have been getting the magic keys here, so that's pretty cool. Okay, so 9:01 right now, 9:02. Let's just wait 3 more minutes and we shall continue on. I think it's going to be a pretty good, yeah, I think it should be a pretty good simulation session. Are you moving to GA? No, just been interested in GA, so I think it's going to be a pretty good idea to simulate GA. I mean, the concepts are the same. Concepts are the same with candles and managing risk, adding positions. They're all the same. It's the only fact that difference is a different pair, moves differently. Spread is a little bit higher on GA because its movements relative to the spread are even more. So we'll see how far we go. I was looking at your old pics on IG. You have a scar. Was it injury? Piercing gone wrong? It was injury. It was an injury. Got in a little bit of a fight with my brother when we were younger, and that's how that happened. Gold. We'll do GA today. We shall do GA. We got 2 more minutes, and then we shall continue to see what happens. You heard Sidhu's new album? No, not yet. GJ has been very hard for me. Yeah, GJ has been pretty hard. I'm gonna agree with that. GG has been really hard. And I think the biggest reason why it has been super hard is because, there's nothing really happening in the economy at this time. Everything is at a standstill. We got the coronavirus. It's still hairs there. You know, you got the vaccine optimism at the same time. Nothing breaking has been happening in terms of Brexit either, because if you look at the past, the only reason we had a lot of volume in pound before was due to, you know, breaking Brexit news, or like, you know, Theresa May saying something, or like, you know, the vaccines coming up, or the cases, they went up. Those are the only reasons we had, like, you know, a lot of volatility in pound yen. But right now everything is just at a standstill. Gold, please, 15-minute, 5-minute. We have a lot of simulations on gold. We will be doing GA today. For gold, you usually wait for 5 minutes to close. All my entries taken on gold are on the live streams, recorded. We've done simulations as well. It's not on just based on 5 minutes. You gotta look at all the time frames: 4 hour, 1 hour, 30-minute, 1 hour. You know, does it make sense to trade 5 minutes at this time, or does it make sense to trade 15 minutes at this time? This you learn by repetition and going over and over again. We should see some movement in G in the future. Australia is making a lot of moves against China. Oh yes, a lot of things are going to happen here soon. All right, so let's continue on. We have 175 people in here. I would really encourage people to not to ask questions. I know some people, like, you know, you guys like hearing things 3-4 times, so I'm just going to say it again. Please don't ask any questions. Every question will be answered without even asking them. So for the sake of a good flow of the simulation, I will ignore all questions, because all questions are going to be answered. All right, so let's just make sure this is being recorded. Start recording. All right, welcome. This is going to be a simulation session. We're going to go over GA. We're going to try to go over, like, you know, adding positions to a winning trade or managing risk if the opportunity presents itself. So let's do this first. So we're going to bring up a random date generator here. Let's bring this up at this point, and we shall choose 15 dates at this time. We're going to go till 2020. We're going to start from, let's say, March. We're going to go till April 2021. 29th is going to be 1st March. We're only going to choose Sundays, because Sundays is when the market opens. Right here, right? And now from this point, we're going to get some dates over here. And let's see, oh, wow, we got a lot of dates over here. Okay, so I know we've done August in GA, right? We've done August in GA. We got May, July, September, October, December. Let's do September. September. All right, September. 20th September. 20th May was my birthday, so 20th September makes sense. 20th September. So we're going to go to the data. 19th September is mine. Oh, nice. Close enough. All right, let's choose GBPAUD. We got your JPY, GBPAUD right here. All right, perfect. 8992, perfect. So now we're going to update the calendar. For people who don't know what this is a, let me get this color here. Let me get a better color here. This simulator is called soft4fx.com. This is where you can get this simulator. I use it every day, not every week. I've been using it since 2016. Since 2016, been a long time since I've been using this thing, and this thing is still running smooth. All right, let's close this new simulation. We're gonna start with, what was it, 2020? It was September 20. We're gonna go with pound AUD. Perfect. September 20 pound. So we're gonna start with 10,000. Yeah, let's start with 10,000. New York close. Leverage is going to be, let's do with 300. Spread is going to be variable, which means that whatever live market spread there was at that time, that's the spread with what we're going to see. History and charts is going to be around 150. 150 means that we need to see 150 candles back, right? So we're going to start simulation. Perfect. Let's start loading on the charts over here. We're going to get the weekly first. daily, we got the 4 hour, we got the 1 hour, 30 minute, 15 minute. That's it. No 5 minute. That's it, right? So let's open this chart over here. So this is our, oh, nice. It's already saved here. Beautiful. 30 minute. Boom. Perfect. All right. The weekly chart. So the rules are going to be, we will focus on the most recent support resistance, and then we're going to mark up the target zone where we may anticipate price to go. That's going to be the rule. We're only going to go over New York session. This will include pre-New York. This will include pre-New York, New York Open, and NYSE Open, and maybe moving into London close, because that's when we see some sort of volume at sometimes too. So first of all, we'll go towards the daily time frame. We see prices moving whatever way it is. The first mistake people make is that they look at the charts whenever, like when the market opens or whenever they have access to the chart. So the rule is to only look at the market when it's going to be time for you to trade. So this is what we're going to do. When we see time right here, it says 0 hours. This means that this is 5 p.m. Eastern. So we're going to move on towards 6 a.m. Eastern. 10 hours is 3 a.m. London Open, 4, 5, 6. So now this is 6 a.m. Eastern, right? This is when we have pre-New York session. And if you look at the sessions right here, you see this. This is pre-New York, 2 hours before the NY Open, right? So we're moving into the London session, and slowly we're going to get a lot of volume moving into the NY session here as well. Right, perfect. So let's take a look on the weekly. Let's start to do some analysis over here. Looking at the weekly, what we can see is that weekly came down, and now the new weekly candle is forming in the middle of this candle right here. So we got to take a look at the daily time frame and see what's going on. So looking at the daily, we can clearly see that, okay, before we clearly see anything, I think we need these line studies here, perfect, that we have a support down here, and at the same time, we have some sort of a resistance up over here, which matches perfectly with the rejection zone which happened here in the past, right? So just by looking at this, it's very clear to say that, okay, we made a low, came up, created some sort of a resistance. Now, the bias is bearish, and there's a possibility we can continue moving down to fill this range at the bottom. Right? This is our super simple analysis just by looking at the daily, but now we got to take a look at the smaller time frames and see that do we have those confirmations for price to continue down. Now, so looking on the 4 hour, what we can clearly identify here is that we have a support forming at this point, right? We also have some sort of a resistance forming at this point. The way we're managing resistance or identifying resistance is the most recent way where candles changed, right? So look, we have bullish candle, boom, support, right? Move up, we have bearish candle, bullish candle, boom, resistance. So this is our zone at this point. This is a 87 pip range. It is 87? Yeah. 87 pip range. And then above this area, we have another resistance right here on the 4 hour time frame. And now this range becomes a 59 to 60 pip range, right? So we have two ranges on the 4 hour time frame. So now we got to identify that, okay, in which range will price continue to move in this session? So let's take a look on the 1 hour time frame at this point. And looking at the 1 hour, we have the same low being formed on the 1 hour down here. Now things are getting a little bit more interesting at this point, right? And before this support, I think we had a resistance formed right over here. We had a resistance formed. We had price break below this kind of like a support area. And if we broke below this area, there's a possibility that price may come up to do a retest and then continue moving down. This is what we can see at this point, because price had a support, broke support, coming up to do a possible retest to continue moving back down. So this is something I think we can focus on at this point. Now let's clone these over to the 30-minute time frame. Let's take a look on the 30 minutes, see what's going on. So 30-minute, perfect, right? Same idea. Support, broke support, coming up to possibly continue down to fill the range. Looking at the 15-minute, kind of like the same idea. So I think at this point, we'll need to see where price is going to go, because look, if we take a look at it from a perspective of, okay, let me just scale fix this here. Because this is when we're looking at from a selling perspective, right? That price is going to come up, retest this area and go down. But now when we look at it from a buying perspective, I think the only way we can look at it from a buying perspective is that if we break above the zone, because then not only we have this wick to fill, but then we also have this resistance to tap into, which is like 16 pips away. It's not enough range, but still it's decent range for price to, continue on within this session. So let's just wait and see how price is going to react to this area to see if it can really continue down or not. Because right now we're just forming in this situation here, and we need to see whether we will create a resistance to retest this low here, or are we going to continue moving bullish? That is the question. But at the same time, if price comes back in this range, then maybe this move down would be a fake out, right? Because if this move down is going to be a fake out, and what we know about fake outs is that, let's say if this is a range, right? This is a range, price is in this range, right? Price breaks below this area. And if it comes back above this area, this means that price broke out of this consolidation to move down, right? And if it couldn't move down and came back in the range, there's a very high possibility it's going to go back up to the other range, like to the other zone, and then it may break out of there. Because if price breaks out on the other side, this means that it tried breaking below and it went back in the range. And if it couldn't break below, what's the most logical place where price will go if it couldn't break below? Right? It's probably going to break above. So that's the probability we may play on if, like, we have a sort of like a fake out. So right now we can see that, like prices coming, it's like rejecting this area. The candles are still open. Look, right? 15-minute candle still open at this point. We cannot take a sell at this point because the candle is still open. We have to wait for it to close. Let's speed it up here a little bit. Right? Very, very important to wait for the candles to close. Right? Look at that 15-minute candle. Right? Candle closed a bearish candle. We can't take a sell because look at this wick down here, right? This is a rejection wick. And the way this is a rejection wick is because if we take a look at the smaller time frame, so let me just bring this up for explanational purposes, right? So I'm just going to add the 5-minute to explain a few things. So looking at the 5-minute here, look at this. Look at this previous candle, right? It closed bullish. When it closed bullish, it made the 15-minute candle close with the wick down here at this point. So this becomes a rejection candle here. It's not a wick fill. So it's not important price is going to go down unless we break this low. If we break this low, then there's a possibility for price to continue down. Right? But if you don't break this low, then it's obviously not going to break down. And the 30-minute candle is also open at this point. So we shall see whether we continue back in this range to continue up, or do we just reject this area to continue down? This candle is also about to close in about 20 minutes, and we're going to find out. We're going to find out very soon what will be the fate of price moving from this area. Candle is about to close in 5 simulation minutes. 4, 3, 2, and 1. There we go. Candle has closed. It looks like it has closed back in the range, right? So now looking at the 15-minute time frame, it really did close back in the range. So now if we're going to maybe say that, okay, maybe this is going to be a fake out, I think we also need to see this 1-hour candle close back in the range, because this 1-hour candle is still open and we clearly don't know whether this candles are going to close in the range or whether the 1-hour candles are going to close below the range. Right, so we got to wait for the 1-hour candle to close at this point. See, look at that. Look at that rejection. It's very, very imperative to wait for the 1-hour candle to close. It's just waiting. See this 1-hour candle? If it closes back below, then I think we're going to go down. But if it closes back in the range, then there's a high probability we can continue moving bullish. And that's the idea we will execute on. Look, candle's about to close. 3, 2, 1. Candle close back in the range, right? Looking at the 30-minute time frame now, we closed back in the range. So this is a fake out at this point. So whenever you have a fake out, there's a very high probability that price will always go to the other side of the range. And if it goes to the other side of the range, and if the fake out is big enough, there's a higher probability that we will continue moving bullish outside of this range to continue moving up. You know, Gabriel saying entry on the break of the high. I think, Gabriel, that's a pretty good idea there. So that's what we're going to do. If we break above the high at this point, we're going to take an impulse entry for price to continue up in this range, and we will anticipate volume to break above this area because we had a fake out down over here, right? So this is very well explained in the fake out section of the webinar. So what we're going to do is we have a $10,000, so we're going to go with fixed lot size, and that's going to be around 2 lots. Yeah, risk around 2%. Actually, let's do 1.5. Yeah, we're going to go with 1.5. All right, let's see here. Mind the spread setting. Spread is big. That's fine. That's fine. We're only going to focus on how price is moving at this point. Oh, there we go. We're breaking above the high at this point. So what we're going to do is we're going to put our stops below this previous area. Let's activate visual mode. It's going to be a buy. Stop is going to be below this candle here. And I think TP, we're going to accept this. We're going to go to trades. We're going to remove our take profit. Right here, looks like someone's trying to zoom in. And since they're trying to zoom in, it's making these lines over here too. Oh, I think our entry is pretty bad because I think we got late. It's okay. All right. So this is a perfect example of a fake out and really trusting volume to continue driving price out of this range. That's all what we're doing at this point. We're just trusting volume to continue driving price out of this range. So we're about 4 pips, 8, 9, you know, around like 12, 13. Yeah, right there, 12, 13. We're going to start securing, right? Because now we're running at around 1.2%. We're going to close partials, close around 90%. Put stops at break even and let this trade run. So this was an example of a fake out right here. Oh, look at that. We're getting some retracement here. Position got stopped out. Awesome. Right. So let's break this down here again. Isn't it risky? Edric, we talked about this entire trade. You know, things are risky when you don't practice enough or when you don't understand that enough, right? So again, we're going to go over this trade right now together. So the whole idea was that we had a resistance here, right? We had a support down over here. Perfect. Then we had this candle. It broke support, came down, made a low at this point, did a little bit of a retracement, went up to this area right here, right? If we would have had a rejection from this point, if we would have had bearish candles closing, let's say something like this, then we would have said, okay, like, you know what, now there's a higher probability for price to continue down and retest the low at this point. We're like, okay, perfect, right? But what happens when the candle closes back in the range, something like this? Right? This move down is called a fake out, right? So since we have a fake out, then there's a high probability that price will continue moving in the opposite way. And that was the entire situation right here. I think we have 2 webinars on this in the database. Can I see it on the 15-minute time frame? Yeah, let's take a look at this on the 15-minute time frame. So this is what it was on the 15-minute time frame. How can we manage risk after entry? There was no, we secured positions. So that's how we managed risk after entry. We put positions at break even. And when you put positions at break even, that means that you're accepting that break even outcome. So took one trade, ended the trade at like 1.1%, pretty good. You can see price is coming back down in a range. Not really bothered with what happens after this. We took one trade, one day, and now we're going to move on towards the next session and see what we can do. Oh, wow, look at that. I guess we're moving further up over here. That's okay. Let's move on to the next one here now. Weekly, all right. Oh, wow, we really moved bullish at this point. So this is the Asian session. We're moving into the Asian session. You can see how there's low volume at this time, and with low volume, we get, some ranges happening at this point. So now we're going to slowly move into the London session. This is 10 a.m., 3 a.m., 4, 5, 6. Sorry. So now we are at New York Open once again, and what we're going to do is we're going to remove all analysis from here. We're going to remove all zones. Remove these zones, remove these zones. Perfect. And we're going to take a look at the weekly. Weekly candle is still bullish. It's kind of like, opening, whatever, half open, retracing. Let's take a look on the daily time frame. Daily candle is bullish now, right? So previous candle closed bullish. The next one kind of like tapped above resistance, but it came back down. So now the question is, will this candle continue moving bullish based on the previous candle closing bullish, or are we going to start arranging on this daily? So let's take a look on the 4-hour time frame now. So looking on the 4-hour, we're also in a range over here. So what we're going to do is we're going to remove all analysis. Let's remove all analysis. Is it just me or Zoom is lagging? The chart and voice are not aligned. I think it's your internet. Everything is fine here. I think it's your internet, but it's recorded anyway. Or if you're watching from the phone, you might have some issues, or if you're laying down in bed, you might have issues, but it's better to watch it on a computer. It's perfect. Okay, so let's take a look here. So 4-hour, we have a resistance forming at this point. On the 4-hour, we also have this wick. Now, when the 4-hour made this wick, we need to understand why this wick was made over here. Like, what happened? Why was there a rejection at this point? So that's what we're going to try to identify here. So let's take a look on the 1-hour time frame. Looking on the 1-hour time frame, we have a little bit of more information here now. All right, my throat is kind of like my throat is going bad here a little bit. Okay, so now, man, this is a very difficult price action at this point. So the only thing I'm doing at this point is creating a resistance. We have a resistance up over here, and then we have some sort of a rejection down over here at this point. And we really need to see whether if price is coming down, or is it gonna come down to fill this wick? This is what we're gonna identify at this point. But also what we can see is that there's a bit of a support here at this point here as was, right? So let's take a look at this. Let's clone this over to the 30-minute time frame. Let's take a look at news. We have no news over here. We had news earlier on. I think that's what maybe moved price here a little bit. But moving on to the NY session, we don't see any news at all. So let's take a look on the 30-minute. Looking on the 30-minute, we do see that on the 30-minute time frame. Now, here's the thing, right? 30-minute, now we can readjust these zones right here because we had a support on the 30-minute right here. We have the new 30-minute forming like this. And now just by looking at the 30-minute, it does seem like that maybe the next candle can wick up, fill this wick, and then eventually fill this wick coming down over here. Right, this looks most perfect, because we had a support, we broke the support, so maybe there's an opportunity for price to continue on down to fill these wicks, and possibly I think we can have another profitable trade maybe. So let's just wait and see what happens here, how price moves, how price forms. Perfect. Let's slow it down a little bit. 30-minute time frame is forming. And I think from this point, if we break this low over here, then we can continue down to fill this wick. This is the only thing I'm looking at. I'm not worried about any support, nothing like that. It's just like we have momentum coming down, and that's where we can possibly look for a trade coming down. This is not important now because we have this wick fill. So unless we don't break this low, we're not going down. So I think we need to wait for price to break that low, which is why we're looking at the 30-minute time frame at this point. Oh, wow, look at that. Didn't break the low, no move down, right? Now, here's the thing. If this candle closes back in the range, what is it going to be? Another fake out, right? And if this is a fake out, there's a high probability we can continue moving up towards the resistance we have. Right, so now we got to wait for this candle to close, right? So we're going to wait for the 15-minute candle to close, and we're going to see, are we going to close back in this range here or not. It's very simple now. We just got to wait for the candle to close, right? It's only 36 minutes, 37 minutes. Wow, look at that. Going up, retracing, coming back down. Crazy movements over here. All right, there we go. 15-minute candle has closed. We have closed back in the range on the 30-minute time frame right here. We're closing back in the range. Now, here's the thing. Taking a buy at this point when the 30-minute candle is open is pretty risky. Taking a buy based on the 15-minute at this point, I think it'll be really risky because, you know, the stop loss is going to be 20 pips. We got a wick fill at like 12 pips, 13 pips, and then price can go all the way up. So I think at this point, I may be willing to miss the move. Let's take a look on the 5-minute. Yeah, I may be willing to miss the move going up because just the comfort level is not there, right? And also the 30-minute candle is going to close here soon too. So the comfort level isn't there to take this trade. Not at all, because still a 16 pip range, and it's like a 20 pip range over here. So yeah, the stop is going to be pretty big. So not comfortable at all. You know, so whenever you're looking at a chart, there will be opportunities where you know price is going to move, but then again, you'll have to make an executive decision to whether to execute on that or whether you want to just like, you know, sit out and just watch it happen. So now that we're looking at this, I think this was the move going up, but you know, at the same time, we anticipated it because we had a fake out, but there was no entry point at all. If the 30-minute candle closed maybe down over here, maybe we could have looked for an entry, but other than that, the way it just moved, there was just like no confirmation at all for price to continue moving. So I guess that's where we kind of like missed the trade, and it is what it is, you know, that's fine. But if we do get a rejection from up top, I think we can have some sort of an opportunity for price to continue moving down in this range, because this is actually 39 to 40 pip range. The 15-minute candle is about to close at this point now. Let's wait and see. 15-minute candle has closed. Let's take a look on the 15-minute time frame. We are creating some sort of a resistance. Looking at the 30-minute time frame, gotta wait for the 30-minute candle to close over here as well, you know, because without waiting for the 30-minute candle to close, I think it's going to be a very difficult time to take a sell for price to continue down. So we'll have to wait for the 30-minute candle to close. So we're not looking at the 5-minute, we're not looking at the 15-minute, we're only looking at maybe the 30-minute, but eventually mostly the 15-minute, 15-minute and the 30-minute. Oh, wow, look at this. 30-minute candle closed bullish, right? So this is why we didn't execute on the 15-minute because, you know, was waiting for the 30-minute, a higher confirmation time frame to close, kind of like, you know, in a way that we can take a sell. So now it looks like if we break the high, there's a possibility for price to continue moving bullish, right? So that's something what we're exploring at this point, because if we're breaking above these highs and there's an opportunity for price to potentially continue up at this time. So let's take a look on the 4-hour, right? So 4-hour is coming up, right? We have this wick to fill on the 4-hour time frame, which is like 30 pips away. Looking at the 1-hour time frame, we're breaking above these highs at this point. Looking at the 30-minute time frame, we're also breaking above these highs. But what's the problem in taking this buy at this point? What's one problem in taking this buy at this point right here? We are at a high, okay. 1-hour resistance, okay. Big stop loss, okay. Broke on the 1st minute, yes. That is perfect. That's what I was looking for. It broke in the first minute and a half. It's breaking the high at this point. So this is where things get a little choppy, because if you take a buy and it's just breaking in the first minute and a half, man, it's just extremely difficult at this point, right? So we gotta wait. We have to wait. Wait for what? Wait for now. Okay, so now if it breaks the high, okay, now if it breaks the high, then we know it's going to go up. But it's just broke the high and it also broke the low. So at this point, it's like, well, what are you trying to do over here? GA. So we're going to wait for the 15-minute candle to close. We're going to see if we can get a confirmation. Okay, let's see here. All right, perfect. 15-minute candle has closed. And now when we're talking about price breaking the highs or break the lows, I think it's based on intuition. It's based on experience, it's based on intuition. It's there's not like a solid rule written that you need to, if it breaks the high in the first 7 minutes and 20 seconds, you can take a buy. No, it's all based on experience. From what I've seen is if it breaks the high in the first 2 minutes, 3 minutes, it's probably better to wait. But there are instances where it breaks the high in the first minute and continues moving up. And that's something you can only learn with experience. The more you see it happen, the better you're going to get at it. But the main problem is going to be that when you start executing like a dumbass, that, okay, like, what if it's breaking the high in the first minute, let me take a buy, and it's a losing trade. And then you just don't learn anything from it. So the best thing is to just wait, sit out, and miss the moves, because the more you miss moves, the more you're going to learn about them. But if you get FOMO and if you want to enter a trade and you don't want to miss a move, you're never going to learn from it. It's very simple. How long should we wait? Answered that. Is there a technical reason why breaking in the first minute is a no-go? We also answered that. So guys, just keep questions to yourself. All of them will be answered. Okay, so now let's take a look at this 15-minute here, right? So far, there's no trade being taken. We had one move happen. There was no confirmation. We had this move happen here. There was no confirmation. We're breaking the low over here. We're rejecting this high. There's a possibility for price to continue down, but we need some sort of confirmation now. So looking at the 15-minute time frame, we would need this 15-minute candle to kind of like wick up and then break down to continue bearish. That's what we need at this point. And I think it's going to be very important to wait for that candle to wick up a little bit and then to break the low, so we can see if we can execute a sell at that point. Oh, slowly we're trying to wick up over here, which is good. And if it starts breaking its own low, I think that's going to be a pretty good idea to take a sell and anticipate price to continue down. See this, we broke its own low after making its own high at this point. So I think this is going to be a very good opportunity to take a sell. So since this is an impulsive sell, we're taking for price to continue down in this low. We're going to go with a smaller lot size. It's going to be a 1 lot. We got the visual mode on. We're going to take a sell over here. Stop is going to be above the 15-minute candle, anticipating price to continue on moving down. Let's go over here and remove this take profit. So perfect, right? We're taking this trade only because of the fact we have clean candle to the left-hand side, and only after this candle made a top wick for it to continue down. Because if a candle made a top wick, this means it made a lower high, and if it broke the previous high and it also broke its own low, this means there's a high probability for the price to now create a lower low after making a lower high. So whenever price makes a lower low and a lower high, that means the trend is bearish, and we have clean candles to the left hand side, and we have, I think, ample confirmations that price should continue moving bearish in this fashion, using some big high-level English words today. All right, nice. We're coming down. We're about 4 pips, 3 pips, 7 pips, 8, 6, 5. Oh, 13, 14. Perfect. So going to close partial positions right here. Going to close about 90% and put stops at break even. And that's it. Let the rest run. If it continues moving further bearish. Oh, nice. It actually did. This 1 hour candle is about to close over here as well, and looks, oh wow. So now looking on the 1 hour, it's just printing side by side, but when we look at the smaller time frames, we can actually see some sort of a structure forming here, right? So this trade was a very, very simple trade. Waited for the candle to wake up and then to go down. Clean candles through left hand side. I mean, oh wow, look at that, still moving over here. So we're going to secure more positions, secure another 90%, and leave the rest running. That's it. Right, so this move here, we had no confirmations. Oh wow, still moving here, GA. All right, so let's close the whole thing here. So right here, we had no confirmation. Even if we took a buy at this point, stop would have been like, 20 pips, pretty big. If we waited for the high to be broken, stop would have still been like, 18, 19 pips. And then, it was just wasn't enough range. Buys over here didn't work as well because, the candle broke up in the first minute. So we waited, price came down. And then we actually executed a sell on the 15-minute time frame where the candle wicked up first and then broke its own low, and then we executed a sell, clean candle to the left hand side. So we waited for the opportunity, right? We waited for the candles to print something we've seen before, something we can execute on with no stress. That's what happened over here. So now what we're going to do is we're going to go over to the next in New York session. We can see price went down, tapped into some sort of a support, and kind of like rejected that area there. All right, let's move on to the next session here now. So we're moving into Asian session. You can see, oh, wow, damn. What happened here? Was this Australian news? Oh, yeah, this was Australian news over here. Kind of like late retail sales, low impact, but had a high impact. Low impact, but had a 50 pip impact. All right, let's move on to our London session. This is London Open, 1000 hours. 4, 5, 6 a.m. Eastern. Moving again into 6 a.m. Eastern. Looking at the weekly time frame, weekly is still moving bullish at this point. Let's take a look on the daily. A daily actually broke out of this area now. So what does this become on the daily, right? Daily candle had support. We broke support, went down, came up, created resistance, and came back in the range over here. So this moves on daily becomes a fake out at this point, right? A daily candle fake out. We're moving up over here. So when we look to the left hand side, maybe this is going to be an intersection area or the range where the daily candle can come into. So what we're going to do is we're going to put a blue line right here, and we're going to clone this over to all the time frames. Right, blue line, we're going to clone it, and this means that this is the target that we're looking for. Wick fill on the daily, which is like 68 pips away. Let's take a look on the 4-hour time frame. I think this is the area right here on the daily that we're looking at. 4-hour, just by looking at it, seems like we are extremely bullish over here on the 4-hour. And let me just break this down over here. So when we take a look on the 4-hour right here, I think it's very easy to understand that we created a support. This 4-hour candle broke above the previous 4-hour candles. And now when we look to the left-hand side, we have this clean candle going all the way up towards resistance, right? And if we measure this range is going to be from current price action all the way up here, like around 66 pips, 65, 66 pips at this point. So our bias is bullish based on the 4 hours so far. Let's take a look on the 1 hour time frame now. Things may change. Oh, wow, look at this 1 hour time frame. 1 hour is also creating some sort of a support down over here. We had a bit of a resistance forming at this point, and the new 1 hour candle is forming. So now we got to identify that, are we going to continue moving bullish towards this resistance or not, right? So we got to take a look on the 30-minute time frame and see what's happening on the 30-minute time frame. So let's zoom in a little bit. Our bias is bullish. We're breaking above this area. So let's take a look on the 30-minute time frame. So the 30-minute candle is closing like a weak bullish candle, right? So whenever you have a candle closing with a weak bullish candle, this means that there is low bullish volume. So we got to figure out how can we get a higher bullish volume for price to continue moving bullish. And that's what we got to look at the smaller time frame now, because what we got to find out is we have to see, why is this wick happening right here, right? Because if this is happening a wick on the 30-minute time frame, this means that there's a rejection here, and that rejection can be identified by 15-minute candle going bearish, right? So this also means that we're probably creating some sort of a minor resistance here, which we can maybe expect price with a lot of volume to continue break out of that area. So that's what we're going to kind of wait for over here to see what happens, because we need price to break above this area for price to continue moving bullish, right? Very, very simple concept. So looking at the 30-minute now, okay, now let's talk about something else over here too. And I know a question is coming in right now. So what we're going to talk about here now, some might say, okay, well, why can't we take a sell after this candle is breaking the low of the previous candle to continue down, right? And the reason why is that because we need this candle to close, because this candle is breaking the low in the first 6 minutes. So we need this candle to close below this area to justify that, okay, like, you know what, we had a small bullish candle, now we have a strong bearish candle closing back in the range, so maybe price is going to continue moving down, right? So we got to wait for that candle to close. We actually have to wait for the candle to close. So this is why we're not going to take a sell over here, because we need to wait for the candle to close, and also we are extremely bullish at this time. So it's easy, you know, 30-minute candle, we got 30 minutes to chill. 30 minutes to chill, 30 minutes to wait for the candle to close. Just gotta wait. See, look at the time. 15-minute candle is about to close in 3, 2, 1. 15-minute candle closed. Let's take a look at the 15-minute candle. It's still open, making a rejection right over here. We have a bit of a consolidation at this point. So we got to wait to see how these candles are actually going to close. So now we got to wait for the 30-minute candle to close. So you can see how it's moving at this point. Really not pretty at all. And yeah, I mean, what else can we do? Just wait for the candle to close, really. So this is where, you know, we look at charts and we look at analysis, we discuss random topics, because, you know, we're just actually waiting for the candle to close. So 30-minute candle has closed bearish. Looking on the 15-minute time frame, 15-minute candle is also closing bearish. Now, based on the 15-minute, if we break the low of the previous 15-minute, we can continue down. But if we look at the range, this is like a 15, 16 pip range. Shall we have some sort of a problem over here? So looking at the 30-minute time frame, if we break this low on the 30-minute, I think possibly we can continue down, but I mean, yeah, we'll see, because there's a bit of a consolidation over here, and I'm not sure what sort of volume is this candle going to bring in once we break the low. I think we will try to execute once we break the low on the 30-minute time frame, because we're making a top wick over here. And if we're making a top wick and if we break the low, then I guess we can continue moving bearish. Because something we discussed last week was also that when you have consolidation to the left-hand side, the only way price is going to move through that consolidation is going to be with the one strong candle moving down. And the way this candle is forming, I don't think this is going to be a strong candle moving down. This is just, yeah, look at this. It's about to close in about, wow, look at that close, right? Nothing, garbage. So what's happening here? We're creating a resistance at this point. So would you not want to see a fresh support to break for sells that would confirm with respecting resistance? Yeah, exactly, right? So that's what I was getting on to right now. So we've created a resistance. We've created a support at this point too. If we break the support, we can continue down. But if we break this resistance, then obviously we can fill the wick, 23 pips, and then we can continue on moving up, right? So when we look at the 1 hour time frame at this point, we can see that the 1 hour candles are creating a resistance right over here as well. So I think it's going to be a much better idea to kind of like wait for price to break above this area for it to continue up. Looking on the 4 hour is also looking good, you know. And yeah, let's see this weak bullish candle. Is it good to take sell when broke? Yeah, that's what we talked about. If we break the low, I think we can continue down, but so far the bias is bullish, so we shall wait. Oh, look at that. We are about to move above this candle right here on the 1 hour time frame. I think that would be a very, very good impulse entry right here, if we move above the 1 hour candle right here, because this is going to be a perfect impulse entry. Because look, we have bullish volume at this time, right? We had resistance forming, and this candle kind of like closed into that area. So if this candle breaks the high of the previous bearish candle, I think this could be a very good impulse entry opportunity for price to continue up, to fill this wick, and then to continue on towards our target on the 4 hour time frame. So let's just wait over here. Or on the 30-minute, if we break below this minor support, then we can continue down. So we're going to focus on the 1 hour time frame here. We're just going to focus on the candle breaking above the high. minutes, 15-minute candle is about to close. You can see this 1 hour candle, we haven't broken the low yet. Once it starts breaking the low, let's move on to 30-minute. It's breaking the low at this point. Let's take a look on the 15-minute time frame. 15 minutes also breaking the low. Now the question is, do we want to take a sell at this point or not, or should we wait at this point? That's the problem. Let's try to take a small sell, a small half, right? Because the trend is extremely bullish, so we're being very, very cautious at this point. Now, this is where, okay, let's do a one lot, and stop is going to be around 18. Yeah, I don't like it. It's a 18 to 19 pip stop. It's way too big. For my own liking, the stop loss is way too big at this point. So I think what I might do is, let's take a look on the 1 hour time frame. Yeah, might as well wait for the 1 hour low to be broken at this point. Yeah, we're going to wait for the 1 hour low to be broken, because look, we're breaking the 30-minute low, we're breaking the 15-minute low, but we're not breaking the 1 hour low. So I think it's going to be better to wait to break the 1 hour low at this point, right? If we break the 1 hour low, we're going to go for a sell. But if we don't break the 1 hour low, then we're not going to go for a sell. So it's situation dependent, right? It's situation dependent. 30 minutes also breaking the high. Is that not a problem? No, so that's why we're looking at the higher time frame, right? You guys have to understand this. 30-minute is breaking the high and it's breaking the low, right? But if we move to the higher time frame, which is the 1 hour time frame, always remember, high time frame is going to give you much stronger confirmation. So in the 1 hour time frame, we didn't break the low at this point, we didn't break the high at this point, right? So now this is like a lottery right here. Whichever way price is going to break, it's going to move in that way, but the overall consensus is bullish based on the 4 hours. So yeah, let's just wait over here. Oh, we're about to break the high over here. The 1 hour candle about to break the high at this point. And I think if we break the high, see right here, we're breaking the high on the 1 hour time frame. Looking at 30-minute time frame, 30-minute candle has just formed. It's breaking the high. Looking at the 15-minute time frame, I think this could be an opportunity to take a buy for price to continue moving bullish. This is what I would want to do at this point, to take a buy at this point, maybe with a one lot. We're going to have a stop maybe down over here, take a sell position. Oh, actually, no. We want to take a buy position right here on the first 40 seconds based on the 1 hour time frame. Now, see, now there are like different variations to these rules, right? Now, on the 1 hour time frame, we're breaking the high. If we're breaking the high on the 1 hour time frame, there's a very high possibility price is going to continue moving bullish, right? But when you look on the 30-minute, this is where you can bend that rule a little bit, because we're taking the buy in the first 40 seconds of the 30-minute, but looking at the higher time frame, we're breaking the high on the 1 hour time frame in the first and the the second half of the 1 hour candle. So this is where experience, intuition, and some sort of I would just say experience comes in within this ideas here. So you need to see these things happen over and over again to kind of like really understand, when's a good time, when's not a good time, and so on and so forth. So let's go over here. Oh, didn't really execute. So put our stops within this range. Now I'm not going to put my stops below this candle. And the reason why the stops are not going to be below this candle is because, okay, let me press accept here first. The reason why is because if we're breaking the high at this point, we're not expecting this candle to continue back down at this point. We're not expecting that. If we're breaking the high in the second half of the 30-minute, when there's a lot of volume in the market at this point, we're expecting it to continue moving bullish, which also means that looking at the 30-minute time frame, let's remove this, and yeah, so we're not expecting the next 30-minute candle to wick all the way down over here. Even if it wicks down, I think we can add another position. See right here, it's wicking down at this point, and now if it starts breaking its own high, I think we can add another position at that point to really expect the 1 hour candle to continue bullish. It broke its own high at this point. Now we can add another position, keep stop loss below this 30-minute candle, and really anticipate it to continue moving up. So we added a position once we broke its own high. So look, right? So this was an example of a dynamic risk, right? Dynamic risk was we entered the first one with the one lot. So total, we were using 1.5 to 2 lots, right? We added one lot, right here. Once price retraced, created a bottom wick, broke its own high, we added another one lot, right? So now total we have 2 lots running at this point. Would you agree it's very hard to explain certain entries because it's experience? Yes, it's experience. Oh wow, look at that, very nice, very nice. Moving up to fill this wick here first. Once we fill the wick, we're gonna secure positions. First position up 16, 17 pips at this point. We're gonna close 90% right here, close 90%. Put stops at break even over here. This one, second position, we could close 50%. Perfect. And leave it running. Now we've broken the wick over here. And if you look on the 4-hour time frame, we're now starting to move bullish at this point. Looking at the 1 hour, we're moving up, which is pretty good. You close the same position twice. Oh, my bad. All right here. There we go. Was good, right? So we got more gains now. See, now it's wicking down at this point. So if it's wicking down, now this is the same idea, right? 30-minute candle formed, NY open, we're wicking down. If it starts breaking its own high, I think we can add another position for price to continue bullish. See, if it starts to break its own high, we can add another position, because if it's making a lower wick, it's coming down, hasn't really stopped us out at break even, just waiting for it to break its own high. And I think at that point, we can add another position to this trade. There we go. It's breaking its own high, right? This is something I'm experimenting at this point. Normally, if this was me maybe 4 months ago, I would say let it break the high of the previous candle. But since we're breaking up this resistance, I'm testing these things here where it breaks its own high after making a lower wick. So we're going to go with a lower risk at this point. We're going to add 0.5. We're going to take a buy position. Stop is going to be below this candle here, candle wick, and take profit. Probably we're going to remove it right here, right? So let's see this. We broke our own high. It made a lower wick, which means now it's broken the high over here. Higher chances of it making a higher high and a higher low, which means price should continue moving bullish at this point. Our target is right over here in the 4-hour time frame. So you can see it's at 13 pips, 14 pips at this point. 12 pips, it's pretty good. We have clean range to the left-hand side. So I think it should have enough volume to continue driving price up. We're also moving into NY open at this point, which normally has a lot of volume anyway. Raja just robbed the bank. Just robbed the virtual bank. All right. Let's close 90% right over here. And perfect. We're going to put stops at break even and let it run. That's it. So we saw how to add positions, right? So now look, if this candle creates a low and breaks its own high, I think we can also continue moving up at this point. But essentially, we've moved up to the resistance where we thought it would. Prices move. Oh, actually, we're breaking above this area. So this is where your trades just keep on running. Look, we're 45 pips, 50 pips, 54 pips. Close to resistance. This is where you get large gains. Look at that, just keeps moving. Close 60 pips here, 45 pips right here, 70 pips running at this. Oh man, damn, this thing is still moving. GA. This is where you don't take sells just because price reaches the resistance. You don't take sells because it just keeps on going. So close this trade right here. Beautiful. Right? There was nothing magical. There was nothing special. Just waited for sells. It didn't happen. Waited for buys. Buys happened. Added positions, right? And price really ran, nicely, right? So GA has a lot of volume. It continues running. So you can see the positions we took right here. All right. So let's move on to the next session here. Oh, damn. We still moved up 40, 50 pips at that point. Wow, crazy. All right, let's move on to the, oh, wow, look at this. Still kept moving here, almost 100 pips more. What was happening at this point? Was it vaccine optimism? All right, let's move on. Jesus, still moving here. Okay, London Open, 3 a.m., 4, 5, 6. So 6 a.m. So we take the trade in New York session and come back to the next New York session, and we're like, oh my God, what happened over here? Price moved up 170 more pips. You're like, this is interesting. I bet we can come down here a little bit. So let's take a look on the weekly time frame. Weekly obviously moved up over here a lot, right? Let's take a look on the daily time frame. Daily moved up a lot, so this was around like a 240 pip move over here. So daily is actually moving back up to this resistance right here. So I think this is going to be a pretty good exercise to basically see what to do when you come to the charts when price has already moved a lot, right? So this is going to be a really good exercise here. So let's take a look on the 4-hour time frame. 4 hours moving bullish, and when we look to the left hand side on the 4-hour, what we can see is that there's a bit of a consolidation right over here, right? And this consolidation is pretty far away. It's like around 70, 80 pips away, right? So since we have this consolidation far away, we look to the left-hand side on the 4-hour. We have clean candle here. We have clean candles up there, clean candles moving all the way up there. So now the question is, are we going to continue moving bullish, or are we going to have some sort of a retracement? That's the question, right? So when we talk about retracements, we also got to take a look left and see where we broke up. So I think we broke above this area on the 4-hour right here because we had a little bit of a resistance. We had support, resistance, and boom, price broke above this area. So we're going to clone this over to the 1-hour time frame, and let's see what we find on the 1-hour time frame here. Right, so this is what we got on the 1-hour time frame. So how do you? Okay, perfect. Yeah, this is on the 1-hour time frame. Now looking on the 1-hour time frame, this is the resistance we can possibly move into, and this is around 60 pips away. I mean, so far the idea is that, okay, let me just scale fix this here. The idea is that maybe price can come down to make a support and then continue moving up. You know, that could be an idea at this point. So let's take a look on the 30-minute time frame. So looking at the 30-minute time frame, we still have the same situation here. Price moved bullish, so we may want price to create some sort of a support for it to continue moving up. That's something what we want to see at this point. So, I mean, yeah, that makes sense, right? Because we've already moved up, a retracement is necessary. Or if we can create like a lower wick to break the high for price to continue moving bullish, I think that's something we can maybe basically spectate here as well. Yeah, I think that could be it too. So yeah, let's see how price forms. Let's see what happens. So yeah, let's head on with it. So it's breaking the high at this point. It's not a good buy right here. We need it to create a lower wick first. There we go. We're creating a lower wick. We're breaking the high right here. Can we expect price to continue up from this point at this point? If we're breaking the high, maybe take like a lower risk over here. Maybe take a lower risk. Put stop loss below this current candle, remove take profit. And let's see if this idea works. Because we made a lower wick and we broke its own high. So this should be an opportunity for price to continue up. The candle's about to close. Oh, I guess we were too ambitious here. Let's just wait. Let's just wait for support to form. No problem. Yeah, that's why used a very, very low risk at that point. Because it's Thursday, we won trade. So the last thing we want to do is to get really cocky. We don't want to get cocky, right? We got to wait. It's better to miss the move at this point. I mean, if it breaks the high and goes up, it is what it is. You know, it's fine because we're moving up anyway. And the more we move up, oh, wow, look at that. The more we move 20 pips, damn. Because the more we move up, the better high we create, and then a better chance there is for price to create a support and then to continue up to retest the high. So that's something we can, so that's going to be our silver lining. Don't you give it a second chance? No. Second chance you should only give to a trade which has candle close confirmations, right? A second chance is like taking a second trade. So if you're losing a first trade in an impulse entry, you don't want to take a second trade with an impulse entry. Maybe the second trade is going to be with a much stronger confirmation. Right? So if you can look at the way price is forming right now, this is beautiful. We're showing some sort of a rejection. And the more rejection we show, the much better support we will make. And then we can have a nice trade moving up here. So I think that's something we can hold on to at this point. So right, we've made a high at this point. The candle is retracing. This is beautiful. Perfect. We're stalking the price like a line now at this point. We just wanted to create some sort of a support. Let's speed it up here a little bit. Right, now here's the thing. If we create a support and if we break that support, we can continue down. But if we can respect that support, then we can continue up. Right, super simple. All right, this candle is about to close in 5 simulation minutes. There we go. 3, 2, 1. Candle has closed. Let's take a look over here. Let's see what's going on. Looking at the 1 hour time frame, candle has closed bearish, which is pretty good. Looking at the 4 hour time frame, we're also bullish, but we got to understand if this 4 hour candle is going to close above this area or whether it's going to close below this area. Looking at the 15-minute, the only thing we know on the 15-minute is that we made a high in an uptrend, right? And if we have made a high in an uptrend, there's a very high probability price will go up to retest this high. 100%. Not 100%, I would say 80%, right? So now the only thing we need at this point is for price to create a support or for the next candle to break the high at this point to continue bullish. That's the only thing we need. We're not looking for sells unless we break a support. See this candle, it broke the low. This is the worst time to take a sell because we have not created support in an uptrend, right? This is what happens. Price moves up, comes down, creates support. And if we break support, then we can continue down. But if we don't break support, man, we're just going to go up to retest this high and maybe continue on further bullish. So that's what we got to wait for right here, for price to create a support, because we are in an uptrend. So do not become the wick. 15-minute candle has closed right here. Let's take a look on the 15-minute. Look at this 15-minute candle closing bullish, but with no wick on the top, right? The 30-minute candle is also bullish at this point. So now what we want is that we want this 30-minute candle to close bullish so the next 30-minute candle can continue moving bullish. And we're going to try something interesting at that point. Something that I've been looking at. Oh, wow, look at that. See, good thing we didn't take a buy. Look at the 15-minute here. Crazy. So now the question is, how will this 30-minute candle close? Will it close bullish? Will it close a weak bullish? What the hell is going to happen with you, 30-minute candle? There we go. 30-minute candle has closed bullish. This gives a really good opportunity for price to continue up. Now, we can do two things at this point, right? Either we can wait for the high to be broken for price to move up, right? Or we can actually, you know what we're going to do? We're going to do dynamic entries here, right? So the reason I'm going to do dynamic entries because if I take a buy at this point, the stop loss is going to be around 26 pips, right? It's a really, really big stop loss. So what we're going to do is we're going to go with a lower lot size, 0.25, right? We're going to take a buy position. Stop is going to be below this candle. And even if we hit the stop loss, we're not losing much, right? We're only losing 39 pounds, which is not a lot at all, you know. So we're going to put this right here, and as price comes down, we're going to add positions, and that's going to be a dynamic risk strategy, right? So let's just start this position at 0.25, and we're going to let it run right over here. Beautiful, right? So as you're seeing price come down, we're not expecting it to break the low of the previous candle. So what we're going to do is we're going to add another sell right here, having the stop. Oh, actually, this is a buy. We're going to add another sell, having stop right over here. TP. Oh, what's this? Is this TP? Actually, no, it's not TP. So we're going to accept it. Wait, hold on. What's happening here? I'm buying. Okay, yeah, I'm buying. Okay, yeah. So we're gonna add another. So we're gonna add another buy right over here. The stop loss is going to be below the previous candle. This is again a 0.25 buy. We're going to accept it right here, and we're going to let it play out. Right? It's coming further down. So the second buy, the stop loss on that one is a lot smaller at this time. We're really expecting this candle to respect the low of the previous one so that we can keep on adding dynamic entries. Right? So now as price continues to push bullish, if it breaks its own high at this point, then we can add another position right over here. So we're going to wait for it to break the high right here. See, it's breaking the high at this point. This is where we can add another position. So we're going to add another buy, having stops below the previous candle. So now at this point, we have 3 positions running, and they're all dynamic risk entries at this point. They're all dynamic risk. Our optimal target is this wick fill and then continuing on further up. That's so much confidence. It's not about confidence. It's about how much you're risking. That's all what it is, how much you're risking. Because if we were using 1.5 lot, that's going to be 150 or 160 pip loss, right? These are 0.25 lots at this point, 0.25. You know, so the risk is very, very small at this point. Like that's not a lot of risk at all. You know, so once we start breaking the high, right? So look at this, right? We broke the high at this point, candle closed right over here. So now if this new candle creates a lower wick and breaks the next candle's high, I think we can add another one at that point. You know, it's going to be, see this? We're making a lower wick at this point, right? And if we break the high of the next candle, we can add another position and expect price to move up. So what we're going to do is we're going to close partials on one position right here and put these stops at break even. And if we break, see right here, now we can add another position and probably add like 0.5 because we secured positions, right? So this is all mathematics at the end of the day. It's all mathematics. When you're adding positions, you're adding risk, right? You're adding risk to the trade, and then you're calculating how much risk that is. So if I enter a buy right here and keep my stop below this candle, this is a 52 pound risk. 52 pound risk plus the 30 pounds we just secured. So 52 minus 30 is what? 23 pounds. So honestly, this risk is 20. So it's all about math at the end of the day, right? So we've broken the high and we've taken that trade, and now we're anticipating it to fill the wick to the top side here at this point. We're also keeping an eye on the pip count. We can see one is running at 0.03, 36 pips, secure this. We're going to close partials right over here as well. Close around 90% right here. Close 90% on this one right over here as well. So these are all dynamic entries, right? Dynamic risk. This dynamic risk webinar is in the database there too. So we're going to put stops at break even on these positions here, and our bigger position is still open at this point. We're going to wait for the candle to close. We've already secured, we've broken the high at that point. So we're going to close 90% right here and leave the rest running with stops at break even right here. Perfect. Right. So this was a simple idea. Simple idea was that price made a high, came down, and then once this candle closed bullish, this provided the entire confidence for price to continue up. That's it. That's it. The entire mathematics and science was done on this candle as it was coming down. That's it. And the only confidence we had that as long as this candle respects the low of the previous candle, we should be moving bullish. That was it. That was the only situation we were looking at right over here. Nothing more. Right. And that's where all the confidence came in from. That's why we had dynamic risk entries at that point. Yeah, so right now it's running pretty good right now. You can see our biggest one is at 24 pips, 25 pips. New candle just started right here. You can look at the time. This is NY open at this point. We can look at the 1 hour candles. We're moving bullish. Hopefully we can continue up to the target right here to the left hand side. Can you switch to a 15-minute? Yeah, let's take a look at 15-minute right here. 40 pips, 42 pips. This is where runners really continue running. So we're going to secure some positions here and yeah, leave the rest running. So this was only based on the way 30-minute candles were forming. We didn't look at the 5-minute. We didn't look at the 15-minute. We only looked at the 30-minute, and we kind of like visualized, holy, still moving over here. And we just visualized where we want prices to move. That was it. So now it's making a lower wick. If it breaks the high, I think it can continue moving bullish, I guess. Do you think everyone can trade successfully with experience? Yes. Sometimes it's just not for everyone. Experience. The only reason trading is not going to be for you if you overtrade, if you over risk. And I'm going to say something I say maybe 10 times a day. Always go over your losing trades. If you don't go over your losing trades, you're not going to learn anything. Nothing. You might as well just quit. You know, because if you don't go over your losses, you're always going to be a loser. It's not going to work. May I request moving forward when you take a trade, can you also mention where you will reduce some risk? Yeah, but like we haven't had those situations where we could reduce risk in this simulation. We haven't had that opportunity. So we've done risk reducing simulations as well. They're in the database. You can take a look at that. All right, so let's close this and let's move on to the next session right here. All right. Oh, wow, came straight down over here. Yeah, it's okay. Secured positions. And now you can see we're moving into the Asian session, low volume. So price is ranging at this point. Moving on towards, this is London Open, 10 a.m. London Open, 3 a.m. Eastern, 4, 5, 6. This is 6 a.m. Eastern right here again. Honestly, this simulation came out to be a really good one. Wasn't really expecting it to be this fire. But a lot of volume here in GA. All right, let's take a look on the weekly here, right? So weekly is rejecting whatever plates it's rejecting, right? So let's move on towards the daily time frame. Daily is, oh, look at that. Daily is closing below this area, right? Daily is closing below this area. You can see the trades we took on the daily wick right here. We closed and rejected. We're closing back in this range. Let's take a look on the 4-hour time frame. Let's remove all analysis on the 4-hour, remove this zone. So one habit is to just do fresh analysis all the time. That's just one basic rule I follow every day. So do fresh analysis. All right, so looking on the 4-hour, we have a resistance forming here, and we have a support forming right here. Very simple analysis, right? And this 4-hour candle broke the low at this point. Maybe it broke the low, retraced to maybe continue moving down again. Maybe, you know, so we got to take a look at that idea on the smaller time frames here now. Looking at the 1-hour time frame, let's remove all these zones from the 1-hour time frame and kind of like zoom in here a little bit and see what's going on. All right, so now based on the 1-hour time frame, we have a resistance being created, and this resistance aligns perfectly with the support that was formed previously, right? And the way it's moving down, before it moved down, we also had the support being created on the 1-hour time frame here. Now we have some sort of a problem here to the left-hand side, which we got to address on the smaller time frames, the 30-minute time frame. So now looking at the 30-minute time frame, we have some more information here now, right? So looking at the 30-minute, obviously we're creating a support right here. And since we're creating a support at this point, I think it's really easy to understand that if the next candle breaks the low of this previous bullish candle, there's a very good opportunity for price to continue bearish. And I think we can continue down to the support, taking a look to the left-hand side, right? Because if I bring my arrow, if we break below this low, looking to the left-hand side, we have, okay, well, first of all, we have this wick to fill. And below this wick, we have clean candle, kind of clean candle moving down towards this support. So maybe we can target this support, because if we move with volume and if we break the low of this weak bullish candle, I think there's a very good opportunity for price to continue moving bearish. And that's something that probably we can focus on here right now. Right, so let's let this candle form, and what we need to see first is for the candle to kind of like wick up first, and then start breaking the low. Because if we can wake up first and start breaking the low later on, I think that's gonna give us some more confirmation that now we can continue moving bearish at that point. So we shall wait. Oh, we're breaking the low at this point earlier on. So if we're breaking the low at this point earlier on, I think it's going to be, may want to see a wick up first. Or if that doesn't come, then it is what it is. We might miss the trade over here. Oh, wow. Really big move at this point. 15-minute candle just closed. Let's take a look at the 15-minute candle because we're looking at the time over here as well, right? We're looking at the time here as well, and let's take a look at the 15-minute time frame here. 15-minute candle is, yeah, I don't know. Looks pretty choppy at this time. 1 hour candle, big wick, 30-minute big wick. Yeah, I'm not sure what's going on over here. We have a resistance forming on the 30-minute time frame. I think if we're looking for buys, really good buys are probably going to be, because if we're looking for buys, we need clean traffic, right? If we come back in this range, we have a lot of consolidation over here, and maybe we have clean traffic right here, moving to like 17, 18 pips up to this area right here. What software you use? Tool, Zoom. You see this? It's from Zoom. It's pretty nice. Okay, yeah, so we're just gonna wait. I don't feel comfortable with this at all, so we're gonna wait. Wait for this to form and close. Yeah, oh wow, look at that. Came straight up. Straight back in the range. So now the question is, was this a fake out? Was this a fake out? Because if this was a fake out and price couldn't close below support and it came back in the range, what's the probability that it can go back above in this range? Right? It's kind of like the first trade we took. It's kind of like the first trade we took somewhere right over here, I guess, where we had a fake out, right? So this is like the same situation right here on the 15-minute time frame. Look at this, that we broke below the support. Let's bring this down here a little bit, right? Right here. So we broke below the support, came back in the range and closed back in the range. Now, if we break the high over here, maybe there's a high probability we can continue moving bullish. So what we're going to do is we're going to use a smaller lot size. And if we're making a lower wick here, and if we start breaking the high, I think we can continue moving up in this range, 20 pip range, right? It's a 20 pip range on GA, a little choppy here as well. But what we've learned in the past is that the only way price is going to break through consolidation is with high volume candles. So let's just wait here and see if we do break above the high. I think if we break above the high, we can possibly execute this smaller risk buy and anticipate price to move up because we had a fake out, right? Maybe that could work. Oh, look at that. We broke its own high at this point, kind of like retraced. So I think this is where we can execute a buy, having the stop below this candle, because if this candle breaks its own low, then it's probably not going to go up. So this is only based on a fake out, and it's only based on the fact that if we couldn't maintain a move below support and we're moving up, there's a very high probability we're going to continue moving up within this range. And this is like a 20 pip range, 18 to 20 pip range at that point. That's the only reason we're taking this trade. Well, I'm executing on this trade. Didn't look at the 15-minute, only focused on the 30-minute at this point. If you look at the 15-minute, oh, it kind of worked out the same way here as well. So perfect, up about 3 pips, 4 pips, 7 pips. Candle's about to close in 5 minutes, 5 simulation minutes. Going to secure around, 10, 12, 13 pips. Going to secure right here, going to close 50% and put stops at break even. And if this truly was a fake out, we should break out of this resistance here. If this was truly a fake out. Ooh, almost. Oh, got stopped up. That 30-minute also made a liquidity wick. Could be another confluence. Yes, this move down. You could also say that this was a liquidity wick, kind of like exhaustion or grabbing orders to continue up the other way, because if this was a fake out here. So see, we've made a lower wick. If we break the high here, I think there's a very good probability we can continue bullish. Not going to execute on it, but just going to kind of like spectate it, moving bullish. So let's speed it up here a little bit. We're coming up, breaking the high. We should move bullish at this point. Oh, wow. Came right back down. Damn. See, no overtrading. No reason to overtrade. Yeah, that was a fake out. We're moving up over here. Beautiful. Let's take a look on the 1 hour time frame, moving bullish, looking on the 4 hour time frame, moving up, possibly to fill this whole range now at this point. Oh, wow. Moving way up over here now. Moving into NY open here as well. Let's take a look on the 15-minute time frame, 30-minute time frame. This is the NY open, and I think NY open should really start pushing price up here now. Keeping stops below this current candle, 14, 15 pips. Just spectating at this point, no trading. This is Friday anyway, so you know we've done our simulation here regardless. Will this be added to the unlearn and relearn videos? Yes, of course, all the time, 100%. Awesome, perfect. So we took, how many trades did we take over here? Let's take a look at this. Market save. Where do you see that? Oh, you see it right over here. History. Okay, let's take a look here. Okay, so we had a bunch of trades here, a bunch of we added positions here as well. I think we had one losing trade, which was a $31 loss, which hit our stop loss, closed by stop loss. Didn't have any chance to secure positions. Other than that, closed trades are right over here. I think our stats are right here too. Realized profit 692, around 6%. We covered a lot of things over here. We covered fake outs twice, liquidity wick. We covered momentum. We covered adding positions. We covered dynamic risk, which is really, really important. Been really using dynamic risk here as well. So yeah, I think we had a pretty good equity curve here, moving up slowly. There was no over trading, no over risking. We waited for candles to form the way we wanted to form. We did one of the money setups, and this is one of the money setups right here. Price comes up to make a high, comes down, creates support, and then moves up at this point. So thank you all for tuning in. I really appreciate it. This will be in the database in about, I would say, 3 to 4 hours. I think the most important thing we can take away from this is how to add positions to a winning trade by using dynamic risk. So take care, everybody. Have a great weekend. We will see you Monday morning. Thank you.